In today's video, I want to chat to you guys about foreign employers employing South African residents. Good day, my name is Henry Gouwe. I'm the owner of SA Accounting Network and I've been in the accounting industry since 2008. Of late, we've had a couple of inquiries. There's been a little bit of change in our South African legislation when it comes to foreign employers employing South African residents, and that's the thing that I want to unpack a little bit with you guys today, and just to give you guys a better understanding of what it is about. And I think maybe just before I start with the presentation, just remember to give the video a like and remember to subscribe to my channel, and then let me head down to my computer, then I can show you guys what these changes are about. Yes, so as mentioned, today I want to chat to you guys quickly about foreign companies employing South African residents. And I think maybe just to start off with, let me just get my computer to work. I think the main purpose of today's video is just to create awareness so that you guys are aware that there's been changes in the legislation. Otherwise, in 5 years' time from now, SARS is going to come knocking on your door and say, listen, in 2024, why didn't you guys start implementing the changes back then? So I think the main purpose of today's video is just to create awareness about these changes so that you guys are aware of it. The next thing that I want to just say there as well is please consult a tax lawyer about these changes as well. Don't just say the guy on YouTube told me this is what I need to do, because that is not the purpose of today's video. In the same breath, I just want to indemnify myself as well, just to say that don't see this as tax advice. Like I said, the purpose of the video is just to give you some information. And I think right at the end, I want to give you guys a solution as well. I think that is just the main purpose of today's video. So, what changed? On the 27th of October 2023, South African government published the Tax Administration Amendment Bill. So this is something that they do from time to time. If they're not happy with some parts of the legislation, then they issued this Administration Amendment Bill just to change certain things inside the Income Tax Act. And then the main thing that we need to be concerned about today is a small definition that they changed, and that's the definition of a non-resident employer. So just that one small change that they made makes a big difference of the way that the tax is treated for when you have South African employees. And so I just said that they changed the way that foreign companies employ South Africans. So that is what I want to unpack. So maybe just the amendment, just to show you guys, you can see that all the stuff that is in brackets is what they took out, and the ones that's underlined is what they put in. So previously it read that the employer who is a resident or a representative employer in case of any employer that is not a resident, and then obviously a representative employer. So that was the requirement of when you need to deduct pay as you earn. So pay as you earn is basically the tax that gets deducted from salary earners in South Africa, because obviously some people might ask the question, what is pay as you earn? So that is just the tax system in South Africa that they uses. So now they changed the legislation to say that the employer that is resident or the employer that is not a resident and conducts business through a permanent establishment in the Republic or a representative employer. So that is basically the change that they made, and just the change in the wording makes a big difference of the way that the tax is treated in South Africa. So let's quickly unpack. What did it look like before the 27th of October? So for non-resident employers, in the past they used to have to appoint a representative in South Africa, or appoint a representative SA entity, or a representative employee. So that company in America or wherever you guys are based had to appoint a South African representative entity, and that company or that representative employee managed the whole salary payments and stuff. So that managed the pay as you earn, which is the tax system in South Africa, UIF, so that is the Department of Labour, so that's almost like social security type of things, and the other one is Skills Development Levy. So it's a levy that's charged in South Africa, obviously to increase the skill level of employees in South Africa. So if you fall inside that category, then the way that they used to do is that the employee pays tax via the pay-as-you-earn system. So every month as that guy earns his salary, that representative employee would deduct the tax from his salary and he pays it over to the receiver of revenue in South Africa. Now, for non-representative SA entities, so or if you had an entity in South Africa that didn't have a representative entity in South Africa, then there was only a requirement to manage the UIF and the Skills Development Levy, but not the pay-as-you-earn. So what then happened is that employee that's sitting in South Africa had to pay tax over to the receiver of revenue every 6 months via provisional tax. So it was the responsibility of the employee to pay over his own tax, where if you had a representative SA entity, then that entity had the responsibility to pay over the tax on a monthly basis. So obviously this tax system over here, there was a delay in the timing of when SARS received their money. So that is the big issue that they're trying to close here. And also certain individuals probably received the money from overseas, but they never declared any income in South Africa. So SARS never received the tax on that income. So I think that is the reason why they try to close this loophole. So post 27 October 2023. So let's have a look and see what changed. So for non-resident employees, so the first line that I said over there, it removes the distinction between a resident and a non-resident employee. So it basically makes everybody the same. So whether you're resident in South Africa or non-resident, if you employ a South African person in South Africa, you get treated exactly the same. That pay-as-you must be deducted on a monthly basis. It must be paid over to the receiver of revenue if you employ a South African resident. So the previously, like I said over here, so one on the left-hand side is if you appoint a representative in South Africa, then that representative managed the pay-as-you and UIF and SDL. So now if you don't have a representative entity in South Africa, now it's exactly the same. You can see that company, the foreign employee, must still manage the pay-as-you and UIF and SDL. So you can see they made the playing field exactly the same. But so previously the employee pays the tax via pay-as-you-earn. Now, also, if you're a foreign employer and you have a South African employee, that employee also pays tax via pay-as-you-earn. So they don't have that option to do every 6 months payment. It must be done on a monthly basis. But now, they brought in a new requirement to say that new permanent establishment requirement rules applies for pay-as-you-earn. So the reason why they did that is, let's say, for instance, you're South African tax resident, but you work in the Congo, or you work somewhere in the oil fields or somewhere overseas, and you permanently that side, then it means that that foreign employer doesn't have any permanent establishment in South Africa. Therefore, these rules do not apply. But if you sit in South Africa, we'll unpack that a little bit just now. I think it's actually my next slide. So this permanent establishment is actually the question that would determine whether you need to be registered as an employee in South Africa or not. So the permanent establishment rules, the definition, they say a fixed place of business through which the business of an enterprise is wholly or partially carried out in South Africa. So I put in brackets then there that said this would then exclude people working overseas. So if you are a foreign employer and you're employing South African people to work for you wherever it is overseas, and you don't have a permanent establishment in South Africa, so therefore these rules would not apply. So you would not need to deduct pay-as-you-earn from those people and pay it over to the receiver of revenue. But if you have somebody sitting in South Africa physically, he's doing the work in South Africa and he's representing your company here, and then these permanent establishment rules would apply, because it means that you fall inside that bracket where you actually need to deduct tax. So this is quite a technical thing. So if you just look at the definition of permanent establishment, so the term permanent establishment includes a place of management. So management is really important. Is that person that's working for you in South Africa, what authority does he have? Do you have a branch in South Africa? Do you have an office in South Africa? So if you have an office where people come and sit and work, a factory, a workshop, or mine, oil, gas, quarry, or anything like that. So furthermore, building site or construction or installation project constitutes a permanent establishment only if it lasts longer than 12 months. So I want to encourage you guys, in the description of this video, I'm going to share the links of probably about 5 or 6 different articles that you must go read about these permanent establishment. And so there's one from the institute that I belong to, and the guy wrote a nice article there about permanent establishment towards a clarification of the issues. And there was another nice article written by Cliff Decker Hofmeyer, which is an auditing firm in South Africa, where they also looked at the review of a definition of permanent establishment. So this is the thing that's going to determine whether or not you classify as a permanent establishment or not a permanent establishment. So that is my first step that I said over there. So step 1, do an assessment, and it's important, guys, to get a confirmation on this. You need to make sure that you've got documentary evidence that you did this permanent establishment exercise to see whether you're inside the bracket or outside the bracket. I mean, if you're not inside the bracket, if you haven't got anybody sitting in South Africa, but you only employ South African residents that's working overseas, then obviously you don't need to worry about this. But as soon as you have somebody sitting physically somewhere in South Africa, even if they're sitting at home working from home for you, then you need to make sure that you double check this. To do an assessment, get confirmation. So if it's not relevant, continue with the previous rules. If it is yes, so if it does come out that you have a permanent establishment in South Africa, then you need to find a workable solution for you. And then one thing that I want to add is at this stage of year, I work very closely with tax lawyers in South Africa, and they are willing to help these guys to do these assessments. So they will give you documentary proof to say yes, you're in, or no, you're out. And then at least you have some documentary proof if the receiver of revenue in 5 years' time come knock on your door and say, listen, did you do this assessment? So if the answer is yes, that you have people sitting in South Africa working for your company who's in Australia or in England or in America, it doesn't matter where you are, then you need to make sure that you are registered as an employer who's employing South African employees. So the solution that we've got then is I work very closely with another accounting firm, and over the past couple of months we've helped probably 6 or 7 companies already to get them in touch with the right person who can register the branch or register a company for you in South Africa. We do the subsidiary registrations, we do the SARS registrations, we help you to open up your bank accounts, do the management of the payroll, do the management of the pay-as-you-earn UIF and STL management, so that you can only need to worry about your business operations that side. So I think, yeah, so once again, like I said, the main purpose of this video was just to create awareness for you guys, so you guys are aware that there's a different or something changed in the legislation. So if you're sitting overseas and you're employing South African residents, there's a little bit of homework that you need to do. You need to go see whether you've got a permanent establishment in South Africa. If the answer is yes, then I want you to get in touch with me. I'm going to share my details or my email address in the description of this video as well. So send me an email and then I'll get you guys in touch with the right person that can help you guys through the process. Thanks once again for watching, and keep an eye out for the next video.